Hello all my fellow eXp agents. Before you cash in your first commission at eXp South Africa, there's something you need to know. No one is going to deduct or pay your income tax for you. At eXp, you're an independent contractor, not an employee. And that means you have to register and pay your own income tax. So don't get caught offside. This is something every agent needs to understand right from the start. I'm Andre Forster. My wife Lydia and I have been in real estate since 2005, and we have been independent contractors with eXp Realty since they opened here in South Africa early in 2021. I'm not a tax practitioner. I'm just another agent who's learned how important it is to get your tax affairs in order from day one. So in this quick video, I just want to help you understand what being an independent contractor really means and what you need to do about provisional tax. So what does this really mean? eXp does not deduct pay as you earn like a traditional company, and they do not apply a tax directive for you either. Your commission is paid to you in full, and it's up to you to manage your own tax payments. So you have to pay your own tax as a provisional taxpayer. Now this doesn't mean you'll pay more tax. You'll still pay tax based on the amount of your taxable income, just like anybody else. The only difference is when and how you pay it. As a provisional taxpayer, you'll pay income tax to the South African Revenue Service, or SARS, twice a year, instead of paying tax every month or every time you receive a commission payout. You will now have to pay your tax in 2 installments, firstly in August and then in February every year, and then also a final reconciliation when you do your annual final tax return. So here in a nutshell is what you need to do. Firstly, register on SARS e-filing if you haven't done so yet. So you've got to go to www.sarsefiling.co.za. Once you're logged in there, you need to activate yourself as a provisional taxpayer. If necessary, please do get a tax practitioner to help you set it up properly and keep you compliant. Then put money aside from each commission. Around 25% to 30% is usually safe, but it all depends on how much you expect to earn for the specific tax year. So you'll need to check the SARS income tax tables to make sure. Then keep proper records of all your commission income, as well as any other income such as revenue share or any income you receive from third parties, such as bond commission, for example. Also, save receipts and keep records of all your business expenses, like marketing expenses, phone, internet, car expenses, professional fees, and any other business-related expenses. The business portion of all your expenses can be used to reduce your taxable income. Then you need to make sure that you file 3 returns every year. Firstly, the 2 provisional returns, they are known as IRP6s. They have to be filed twice a year, as I mentioned, in August and in February. Then you have to file a final tax return every year. That's called the ITR12 after year end, when SARS balances everything to see whether your 2 provisional tax payments that you made were sufficient or not. Now all this might sound like a lot of admin, but it's actually a good thing. Being a provisional taxpayer gives you much more control, and you can deduct your legitimate business expenses from your income to reduce your tax burden. So to wrap up, I really hope this video is of help to you. Remember, I'm not a tax practitioner. I'm just another agent who's learned that getting this right from the start makes life much easier. At eXp, you're building your own business. And understanding how provisional tax works is a key part of running that business successfully. So remember, if you're unsure about anything, please do speak to a tax practitioner and get help. I wish you all the best and huge success. Take care, stay safe, and God bless.